All right, let's try this one more time. Probably only got like 20 to 30 minutes tops. I hope you guys can hear me. I got the microphone on, I got the webcam on. Unplugged my router, plugged it back in. Comcast, dude. Anyways, let's see if we can get back. Let's see if we can talk to some people. I want to get some information out to you guys. I want to learn from some of you guys because some of you guys seem to know about these VIX volatility trackers and indicators and ETFs. So I want to hopefully get a conversation going before the internet just destroys this stream. Oh gosh, okay. How are you going to make a video on how options works? How or when? I mean, I know how. Okay, can finally hear and see the stream. Thank you. Okay, so let's just jump into it. If you tune in later, you can always watch the stream once it gets uploaded. But I want to show you guys. I want to start by showing you my positions, a little bit of my positions, so you can see some of the concerns I have with what's going on with the market. Obviously, people are panic selling. There's also some algorithmic trading that's probably driving prices down a little bit. There could be other factors, obviously, but I'm not too sure. But I kind of do think, and correct me if I'm wrong, but I think when traders have the algorithm problem, like the algorithm trading, those are running trades like massively, really quickly. And when things are selling, and the algos are selling really quickly, it kind of magnifies or makes it seem worse than it is, the sell-off. And then you have the people reacting to that. They start panicking, so it just becomes like a frenzy of people panicking. And then it just drives the price down in a quicker fashion. Does it mean that the economy is crashing? I don't think so. It's just a reaction of algos, people panicking, and it just kind of like exacerbates the problem. And so with any flash crash or any crash, I mean, the stocks have always recovered. It takes different amounts of time. Like after the Great Depression in 1929, it took like 25 years to recover, but it still recovered. And then in like with Vietnam or like the 1960s, it took like 15 or so years to recover, but it still recovered. And then with the 1987 crash in October, I mean, that crash like lasted a day. I mean, it didn't last that long at all. And then the dot-com bubble took maybe, I don't know, 3 or 4 or 5 years to recover. The 2008 crash took like a year or two to start recovering. The point is, once it goes down, you have the traders who really know what they're doing, and they see the bargain prices that are what these prices are for these stocks, and then they start swooping in, they start buying it up, then the algos start buying, then people start getting more confident, then they start buying, then it kind of comes up again. So that's kind of my take on the situation. Today, I think, was just like what happened on Friday scared people. I think the more panic, it's like a domino effect. Even my cat is scared. So I think that's kind of what caused today to be even worse than yesterday. Now, will tomorrow be worse than today? I really hope not, but it's possible. And does that mean that all of a sudden our economy is bad? No, because it was fine 4 days ago. Still probably fine now. I mean, did you lose your job in the last 4 days? Probably not. Okay. Did your wages go down in the last 4 days? Not really much has changed in the last 4 days in terms of how our economy is. It's just a lot of speculation, it's a lot of worry, it's a lot of doubt, and it's causing people to be unsure. And when you don't know what's going to happen, people tend to be protective of their money, and so they start to sell stocks, they start to buy puts like I did. I bought puts, they start to buy calls on the VIX, they start to do other things that's not investing in the economy and the stock market. So oh, yes, I will be making a video on how options work. I'm not a professional, though, so please do your own research as well as what I say, because I've only been trading options for 1 year now. I have 1 year experience. That's not a lot in the grand scheme of things. I think once I get like 3 or 4 or 5 years experience, I would say you could definitely kind of take my information and use it. But still, what stock should be part of your shopping list when it's time to buy? I saw on the TV what they were mentioning, that you should look for stocks that have dropped more as a percentage than what the Dow dropped. So like if the Dow dropped 10%, let's say, if there's stocks that dropped more than 10% that you think are still really good companies, then those should be companies you look out for. They mentioned like Wynn Resorts, which someone mentioned in the last live stream, because they're down like 17 or 18% from this morning. I mean, they might be down more now, but they were down more than what the Dow was down. And so obviously with the whole scandal going, their price has kind of fallen down, but if they can recover from that, they have a lot of potential to make a bigger gain. So stuff like that. But other than that, just the companies that you like, and again, this is my personal opinion, not a financial advisor, but I would be looking for the companies that I've always been looking for, like NVIDIA. I feel like is getting really cheap now, and Universal Display. All those companies that you normally like, I think would just be just companies you try to get in cheaper, and that's what I've been doing since Thursday and Friday and today. I've been incrementally buying, just trying to buy stuff cheaper. Obviously, in hindsight, I should have waited till like the end of the day to buy, or maybe tomorrow, but you can't predict the future, and so I don't know. I'm not panicking quite yet. I really hope, Brian, I hope you're right. I hope tomorrow will be good. There's a lot of questions about the market at the moment. I think we'll get a bounce to cover up this rigged stuff, and that's something I definitely want to look into because I don't know a lot about that. The risk-reward ratio for options, it's pretty high. High risk, high reward. There's different strategies you can do that's lower risk, lower reward, like credit spreads, for example, or straddles, I guess, or like, I don't know. There's others. I'm not an expert, but there's different strategies you can do with options that lower your risk, lower your reward, but also lower your risk. And it just depends on how much risk you can take. If you like to gamble and you like to take risks like me, and you have some money to gamble with, you can do the higher risk stuff, kind of like what I'm doing, but it's really high risk. I went safe with the safe play and got into J&J. Is that Johnson & Johnson, I'm assuming? I'm not sure. I thought the ticker was just JJ. I forget, though. Or just J, I thought. I don't know. I forget. But anyways, yeah, so let me show you how much we're down today. I'm just going to show you. Let's just start by looking at this. So I'm going to put this on the screen here. Let me know if you can see it. It's this notepad here in the bottom left corner. So this is kind of interesting, though. So February 1st, which was Thursday, we lost $15,981. Okay, so pretty bad. Not our worst day. In fact, I've uploaded vlogs recently where you've seen my worst days. So I uploaded one, I think from November. No, it was, I think they might have both been, I forget, but I had a day where I lost 21 or 22 grand or something in a day. Oh, Mr. Joseph. Okay, so you're Brian Felix. Awesome. I'm glad you're here. Please don't leave. So yeah, so this actually wasn't even. I've had two worse days than all of these, by the way. So I'm trying to look at the silver lining. I'm trying to look at the positives. I've had several days worse than this. I think I had one where I lost 16,000 something. I had a $21,000 loss one day. I've had a 29,000 loss one day. So. Oh, cool. Mickey Bang Bang, part of the reason I got into them over Procter & Gamble. Okay. Yeah, he's... Mickey Bang Bang, he's also investing, so shout out to him. Always got some... I like when you guys put out some good tips and good suggestions. Keep those going, please. Thank you. I got into Boeing thanks to Mr. Joseph or Brian Felix. Made a good return on that one. And I'm taking his advice. I'm investing in Caterpillar, which I kind of pyramid bought. I successfully did that. I bought some when the price was going down, then I bought more when the prices came down more. I wish I had more money. I would have kept doing that. But anyways, let's go back to this. I get distracted easily if you guys can't tell. But February 2nd was my worst day of the last three. And today was actually my least worst day of the three. Even though today was the worst day for the Dow, it was my least worst day in terms of my losses. Now, it wasn't much. I mean, it was like $14. But it was, I still consider that a positive that out of those 3 days, even though today was the worst day in the history of the Dow, in terms of points, I don't think percentage-wise it was the worst. But this was my least worst day out of the three. And so my final money loss, you see what I did there, FML, was that much I lost in 3 days. So that's really crappy. And It sucks. Obviously, I'm not happy right now. I'm not excited. It's kind of cool we broke a new record, but I don't like to break those kind of records. So, did you have any put options? Yes, I did, and I will show you guys that. And so, in fact, let's go to my Scott trades here. So, right here, I'm not going to scroll down because I don't want you to see where I'm at total yet. I want it to be a surprise. Once I get to the January videos, you'll quickly see where I'm at. So, I'll just give you a clue. I'm up from when the vlog I last uploaded. I'm up from that. So let's just leave it at that. And I'm still up for the year, so we'll leave it at that as well. Even at these last 3 days, I'm still up. So I'm just hoping that we can just kind of stay up in the positive. I really do not want to see more days like this. This sucks. Anyways, so these were my positions that did the worst today. Like all of these. I mean, there's a handful. But in terms of dollar amount, NVIDIA was our worst laggard today, if you want to say. And I want to talk about what Brian Felix said, or aka Mr. Joseph said. He was talking about open interest, and I should be a little concerned because if there's not a lot of open interest, I might not be able to close my positions. And I haven't really thought about that, or I've thought about it, but then I forgot about it. But I do really need to keep that in mind in the future. And so I'm looking at my strikes, and right so far I think they're still okay for the most part. But I was looking at Google. So I'm going to go to this next page here. By the way, let's see, let's go to here. So this page, it might be really good. Let me zoom in so you guys can see. Okay, so right here, oh, this is the wrong date. Oh, no wonder. Okay, maybe, sorry guys, I clicked on the wrong date. So I'm right now I'm at an options spread page on the NASDAQ.com website, and I'm looking up the Google call that I have. And so I'm going to calls right here, out of the money, all types. So this is for the January 19th expiration, so maybe the open interest will be a little bit higher. Okay, it is a little higher. It was at 888 for the September expiration. This is 272. So if you know more about me than with options, I have one call for Google. I just have one. So if, let's say I were to sell this week, I'm guessing because of this open interest being at 272, I think I could close that position. So let me know if yes or no. I have just one Google call. I'm hoping I can get rid of it if I need to. But I still like Google. I mean, it's Google. Who's gonna all of a sudden not use Google anymore? I mean, we're still using YouTube. We're still using Google. We're still using Gmail. I don't think anything fundamentally has changed with Google. It's just a panic type of situation. I think the economy is still strong. We'll talk about that next. But yeah, so I'm gonna hold on for a little bit longer with these, but we'll see what happens, because if Google goes to like $800, I don't know how fast it'll be able to come back up to $1,300. But you know what I mean? Like, I just really need to be monitoring it very, very closely. That's what I'm going to be doing the next few days. Universal Display, when will the bleeding stop? I think it'll stop pretty soon. I really do think Universal Display is a pretty solid company. They don't seem to have moves that are as magnified, like, I don't know, like Tesla, for example. Tesla goes up really like a lot in each direction. Apple and Universal Display are a little calmer. Apple's even more calm, I think, than the other ones. They move a little slower. But, okay, cool. 272 is more than enough open interest. Effectively, all you need is one open interest. Okay, cool. That's what I'm thinking. So, what's up, by the way, Sai Boucher? Thanks for coming in. I hope I pronounced your name right. I wish I could afford Google. Yeah, I could only afford one call. Yeah, so most of your calls are 2019 expiration, plenty of time. So, yeah, I'm hoping, yeah. Crypto, I'm in crypto. I'm getting killed there too. Big surprise, right? I'm not even really watching it right now because it's kind of annoying to me. So, but I do like cryptos as a technology. I don't like the trading because it's just a lot of amateurs, I feel like. The spreads will kill you, especially if people are trying to buy it cheap. Yeah, that's a good point. So I really do need these prices to come back up. Otherwise, I'm going to take big losses. And so that is the lesson here. So let's go to the next page that I want to talk about. By the way, let's look at this chart here. This is the Dow for the last 3 months. And if you look where it's at, and you think about where we were in January of last year, we just hit 20,000 in January of last year. So we're still up quite a bit. In fact, we're up to where we were basically right around early December. So, I mean, if you just basically skip from early December to now, we're still doing okay in the grand scheme of things. This is just, if you look at the run-up, let's look at the 6-month run-up, and let's look at the 1-year run-up. I mean, I think a lot of analysts are saying, sorry, I try to talk too fast and then I get jumbled. But if you look at how fast this run-up was, that's another reason that triggered all these selling, because people are looking at this run-up and they're like, this is not sustainable. You can't keep this curve going. Just mathematically speaking, it would be hard to keep this graph going at this rate, because at this rate we would hit like 30,000 by like next month and then like 50,000 by summer, and that's just not mathematically feasible. So people are realizing that and saying, okay, this is getting a little crazy. We need to start taking profits. They start taking profits. Maybe algo traders starts triggering sells. People start to panic, and then you get a correction, and that's kind of how that works. And so, again, if you look at the 3-month, it's just back down to where it was in December. I'm not too concerned, to be honest. If it drops down to like 20, then yeah, that's like panic mode, I think. Or, if it drops to like 20,000 in the next month, that is really, really bad. So I think we do have a lot of time. It's only February 5th, okay? We're only 35 or so days into the year. We still got 330 or so days left of the year. So I'm trying to remain calm, and it is kind of a bull market, but I mean, do you count 1980 to now as a bull market? Because from 1980 to 2000 was a bull market. If you look at the Dow from 1980 to 2000, that was a 20-year bull market. And then we had a bear market with the dot-com bubble. We had another one with the Great Recession in 2008. So I don't know. It depends on the time frame. I don't know what time frame you consider a bull market, but yeah, I mean, and I'm also hoping that the governments can learn from history to kind of, minimize the damage when recessions do happen, because we've been through so many. I'm hoping that they could do that, and if we do have any recessions in the future, that they don't last as long as in previous ones. So you said we crossed the 50-day moving average today, which is a key indicator. Are you talking about the 200-day or the 50-day cross the 200-day? The next is 100-day moving average. I just hope it doesn't cross that. So you're hoping what doesn't cross that? But yeah, I do think there's still a lot of people just getting into investing. So there's a lot of new money as well. I think there's still time to recover from this. Now, here's another thing I want to talk about, guys. So let's go to this. Actually, no, this is the article about today. So Dow ends more than 1,100 points lower as the sell-off deepens. And they're talking about how did the benchmarks perform. The S&P dropped 4%. The large cap is off more than 5% from its all-time, but a lot of people were expecting a 5 to 10% pullback. And so the S&P had gone 406 sessions without such a decline, marking the longest period without a 5% pullback in 20 years. Now, I guess, there you go. I mean, it's bound to happen. It can't go up. It can't go up forever, like people say, but it still can in a way. It's like it can't go up every single day. You're going to have your bad days, and if you go up too much too quick, you're going to have a correction. I think that's normal. Okay, Snickers. Okay. You need to go down here. So yeah. Now the financial sector says it's the biggest loser, tanking 5%, followed by healthcare. Yeah, rising bond yield could continue to peel some money away. And I'm learning more about this now. I really haven't been paying attention to bonds, but apparently the 10-year Treasury note is like one of the big indicators. If it goes up too high, what I believe is a lot of people are taking money out of stocks, putting it into bonds because it's safer, it's more guaranteed, I guess. And I personally still don't think this is a really good percent. And Kevin O'Leary was on CNBC saying the same thing. He said if he wants to get a real return, he's not investing in bonds. But some people like bonds, so there you go. I mean, there's a lot of people out there. So let's see what else. Now, this guy from Morgan Stanley is saying he's in no rush to buy the dip as there are growing worries about unfunded fiscal spending and a Federal Reserve that appears to be behind the curve when it comes to rates. That's another big thing that's making people worried is we have a new Fed chair now, and we're not sure what he's going to do. But there's also, there's also another article I read that said that we're going to be fine. I forget what the title of that article was, but there's a lot of stuff going on here. Now let's go to another article that I was looking at. This article, or this page, is unemployment rate in recessions. I basically Googled unemployment rate in recessions and got to this website, iMarket Signals. It kind of gives you some indicators that can help you, I guess, anticipate when the next recession is, using the unemployment as an indicator. Now, if you go, I don't know, if you write this website down, maybe I'll copy paste this in the chat or something. It's just called iMarketSignals.com. But if you Google unemployment rate in recessions, just Google unemployment rate in recessions, you can find this article. It's a really good article. I was talking about it in one of the vlogs, which I will be linking to, but for the most part, let me just put it here. Hey, Healthy, Wealthy, and Stealthy, what's up, man? I've been seeing you've been uploading more recently, so that's cool. Hope your school's going well. Okay, so yeah, 2010 to now is not like, I don't know, I think we still have some room. There's analysts who say we still got a good 3 or 4 years left of the bull market. The New York Stock Exchange almost shut down today. A 6.9% would have went into shutdown at 7%. Wow. See, I didn't even know that could happen. That's crazy. Yeah. Well, thank God we didn't have that happen. Jeez. I'm going to look that up and maybe talk about it in a future vlog. But let's go back to this because I don't want to drag too long. But this article here, if you have a look, this model relies on the short 12 period, a long 60 period exponential moving average. This is all about unemployment rate. So this is talking about unemployment rate. This was updated with the January figure of 2018, 4.1%, which is the last you guys have probably heard the unemployment rate was at. The 8-month smooth annualized growth rate, I'm not 100% how that works. And then the 19-week rate of change in the unemployment rate. So basically, here are some of the indicators that has accurately predicted a recession in the past. If the unemployment rate was in the process of forming a trough, like it was in 2016, and then it declined throughout 2017, it says the short EMA remains below its long EMA in the blue line graph. So this explains the chart that's right here. So here's the UERG, which is this the thick green line right here. It says when it forms a trough, then it kind of comes up. That's when the recession kind of starts. So you can see it troughs here, comes up here, and this gray bar here is the recession. There was one right here. This was the .com era. This is 2001, 2002. This was right after the housing market crashed. So basically, the indicators are saying, and let me click this one to enlarge. I'll just basically try to explain it. Okay, so if you can see this, hopefully you can. So basically, there's some indicators. One of the indicators is if this black line goes to 8%, we're in a recession, or if it's on its way to 8%, you can see it's kind of going higher here. Then we're in a recession. Another one is this one, and again, read this article. It's really, really good. The smooth annualized growth, whatever. Once that peaks, we're in a recession. Now this red line here, when it crosses below the blue line, so when the long average crosses the short average in a bullet or in a bearish way, which means it goes down below it, that's another indicator. So right here you can see it crosses, and then it kind of, all these together went into recession mode basically. And then another one was when I think this UERG also goes above 0. So this green line right across here is the 0 mark. So once it goes above 0, that's another bad sign. So you can see all those came into play here. Now they came back down. We started to recover a bit. And then here, once again, the red line crosses the blue line right here, which triggered about an 8-week signal until the recession started. You have the black line here going up past 8% right here. You have this one peaking like crazy. Okay, and then it starts to come down again. So now we're coming into our bull market from 2010-ish, 2009. And if you look here, the red line is still above the blue. It hasn't crossed. The black line is below, actually it's below 0%. It's supposed to be below 8%, but it's below 0%. And then the green line here is below 0%. So all of these indicators show that there's no recession in the near future based on these indicators. And so that's just what this chart is about. and it kind of made me feel better when I looked at it and when I studied it. And so I wanted to show you guys that. So hopefully you guys can see those indicators saying we're not in a bear market, we're not in a recession, and those things can be good. So hopefully you guys can still hear me and see me. Hopefully you guys are looking at the screen. So that is that. The next thing I wanted to do is I was also looking at my NVIDIA calls that expire in January. I have a 250 strike, which there appears to be a lot of open interest with that one. There's a lot of open interest. So hopefully right now, if I did need to get rid of it, I could. I'm not sure if I'm going to, because I still got a lot of time, and NVIDIA is still pretty close in the grand scheme of things to 250. So I'm holding on to that one. Again, let me show you the position I'm talking about. And while we're on this page, since we're on the Scott trade, let me go up to the winners, because we did have some winners today. So let me try to zoom in a little bit here. Okay, that should be good. I don't know why it's not centering, but that's okay. So I did have, believe it or not, I had some positions that went up today. So this Amazon call, I don't know how, because I think that went down today. Actually, I can't remember. But mostly everything went down. Yeah, Amazon did go down. But the call went up. So again, this is a gain for today, but I don't expect that to last very long. But we do have some puts, which has really been kind of stopping the bleeding, even though we're bleeding a lot. I bought one more SPY put today to try to jinx the market back into a good mode, but even that's not working. So I added one more put, made a little bit of money on that, but then the other four were up 57% from yesterday. I bought 5 puts on the QQQ. I've been having people, and I think people in the stream have been recommending it, so I finally took your advice and I got in yesterday, and it helped. Also, Albemarle for some reason went up 30%, so that was cool. And then some of these. Now this is a covered call that I sold, so I actually bought 100 shares of Universal Display. Instead of buying more options, I bought a couple options, but I also bought stock. So let me scroll down. Here it is. I bought 100 shares, and it's been a while since I bought shares of stock. But it is a lot less riskier than options. So I bought that, and you can see I only lost 920 on that, which is, in the grand scheme of things, compared to what I've been losing, it's not that bad. But I sold a covered call because I can make income on that. And if the stock goes down, I'll get to keep that. So I think I made $188 when I sold it. So it expires this Friday, and if that expires worthless, I'm going to sell another one right after that to kind of get some more income coming in. But this definitely helped me to not have one of my worst days ever. And so I want to thank you guys again for yelling at me to get some puts. I should have got more. Obviously, hindsight's 2020. The Dow was actually, the NASDAQ was up at one point today, and the Dow was almost even. So at that point, I thought things were going to be okay. In fact, I sold my Amazon puts at that point. No, my Apple puts. I had 2 of them. So that was stupid. I should have held on to those. So, yep. So let's go to some comments. It would be nice if that chart was live. Yeah, right. Seriously. So do you think it's the start of a bear market? I don't think so. Based on that chart that I was just showing you guys about the unemployment, I don't think it is. The thing to look for, so Brian's saying the thing to look for in this upcoming bounce, it's going to determine the whole year and what kind of market this really is. Yeah, I think I heard them say yesterday that 100% of the time January has a positive month. The year on average will have a positive year. They said it's happened 100% of the time. So I'm hoping they don't jinx us with that. But they also say that when January is really good, February is usually bad. So right now it's following the pattern. I mean, we've gone, especially 2017 was such a ridiculously good year. It's just kind of the market reacting to so many good days in a row. And I think that's all it is. That's just my personal opinion. Once people realize how cheap these stocks are, they're going to jump on them, and then they're going to hold them, and then they're going to make profits. And so I think it just takes a while. It just takes a while for the kind of the market to come back up. So that's what I have to say about that. And yeah, so Mr. Joseph did mention this comment here. He said a lot of people lost there are the whole accounts on the SVXY and after hours, people losing 40K, 30K in a matter of 5 minutes. Now the SVXY and the UVXY might get terminated. A lot of rig scams. So I don't know a lot about this. I was trying to look some up, looking up how this, how does the SVXY work? Basically, it says it's an exchange traded funds, an ETF that allows you to bet against funds like the VXX while avoiding some of the issues associated with a direct short. And some of this is over my head. So I would do some research about this just to kind of get, if you want to learn more. But it says it trades like a stock. It can be bought, sold, or sold short anytime the market is open, including pre-market and after-market time periods. With an average daily volume of 8 million shares, its liquidity is excellent, and the bid and ask spreads are usually a few cents. So it has options available on it, again, which is even more risky, with 5 weeks worth of weeklies and strikes. Weeklies mean like when the expiration dates are every week, like a lot of them are, and then strikes in 50-cent increments. And then like a stock, it can also be split or reverse split. And it says, but unlike the VXX with 4 reverse splits since inception, the SVXY has done 3 1-to-2 splits to bring its price down to optimum trading levels. So they say 1-to-2 splits. Sometimes they say 2-to-1, but basically they're splitting it so they have more shares. That brings the price down. If you do a reverse split, you're condensing shares, so each share goes up in value. But yeah, it could be traded in most IRAs, Roth IRAs, although your broker will likely require you to electronically sign a waiver that documents the various risks. Yeah, because apparently shorting of any security is not allowed in an IRA. Yeah, that makes sense because that's hella risky. But anyways, I don't know much about these. I'm gonna see if Brian or Mr. Joseph can comment basically what's going on. I also think the crappy weather is making people annoyed too. We're having a snowstorm here in Chicago. It's kind of crappy. I'm waiting for my girlfriend to fly in. She's flying in, so I'm hoping she's okay. But yeah, she's waiting. Her flight got canceled. She had to get on a new flight, so I'm waiting for her to let me know what's going on. But yeah. So can any of you guys add anything else about the SVXY, or I don't know how you pronounce it, and then the U? I don't know what the difference is between the S and the VU. The Ultra VIX short-term futures. This explanation is pretty much identical to the other one. So this one I thought was funny. There's no sales, there's no quarterly profits, there's no profit loss, because this is not give you shares of a corporation. This is just betting against something else. So it says forget about doing fundamental style analysis on the UVXY. While you're at it, forget about the technical style analysis too. The price of the UVXY is not driven by supply and demand. It's a small tail on the medium-sized VIX futures dog, which itself is dominated by SPX options, which has notional value greater than $100 billion. Not 100% sure what that means, but this is closely tied to twice the daily return of the S&P VIX short-term futures. There's just lots of going on with VIX and stuff. I'm still learning about that, so forgive me. But basically, the VIX kind of measures volatility. Oh, okay, so the UVXY is bearish and the SVXY is bullish. Okay, one is the inverse of the other. Oh, okay, wow. So do you plan on having more edges in your portfolio? Do you mean hedges? I think that's what you mean, maybe. Maybe gold, stocks, and options. Yeah, I am going to. In fact, I thought I have. Let me show you one more thing. Oh, I'm logged out. So I did also buy 50 shares of AT&T, which is one of those lower risk stocks you can get, and they have high paying dividends. And I think I'm going to try to get another 50 so that I can sell covered calls on that, as well as get dividends from that. It's going to greatly reduce my profit because obviously stocks versus options is not as profitable sometimes. So it's going to lower my swings, but hopefully once things pick up, I'll make enough on the other options I have. But anyways, yeah, so that pretty much covers everything I want to talk about. So I'm personally still holding. I just spent the last of my money today kind of buying back into positions at lower prices. I think Caterpillar was the last position I got into. I bought like one call at $11 a share, or $11.50 or something. And then I bought 2 more calls today at $1 cheaper, which is really $100 because it's options contract, and I bought 2 of them. So I saved $200 by waiting an extra day. But honestly, I thought the market was going to start recovering. Once I saw the Nasdaq went up, I was like, okay, this is good. Yeah, so it's hard to predict the future. I still think the cheaper, every day it gets cheaper, its prices get better. So if it goes down tomorrow, it's even better buying opportunity than today. And then the next day, if it goes down more, it's an even better buying opportunity. I don't think it's going to keep going down. I mean, everyone predicted this. It's funny. It's funny because they were talking on the power lunch. They were saying everyone wanted this correction, and now that it's here, they're freaking out. And the other guy was like, they didn't really want it. They didn't want this correction. They say they did, but they didn't because it's scary. Like you talk about it, but then when it happens and you actually start losing money, it gets kind of real really fast. And so, yeah, it was a freak out. Is that what you meant? Fake out or freak out? I think it was both, I guess. There were one Friday and today for exits. Oh, there were one Friday and one today for exits. Yeah, I mean, when the market went up, that was a good time to get out, but I think I bought some on Thursday, I bought a little bit more Friday, I bought a little bit more today, so I was trying to implement a strategy, a plan to get stuff in cheaper. I did get into everything cheaper. I don't think there was anything where I had to raise my price and get back in more expensive. Everything I bought was cheaper than when I sold, so I was happy about that. I definitely saved a lot of money that way. But do you think this year could be a bear market or that this is just a correction? I think it's just a correction. Financial thesis, like the graph was just so fast. It's just this graph. Let's look at the 1 year again. It was just, actually, let's look at the 2 year. I mean, it's just going up so much. And in 2017, let's go back to 2017. I mean, there wasn't really any bad correction days. Like, and they said in an average bull market, you have, someone was saying on TV today, you have 2 days per year in an average bull market where you lose, I believe, 5% in a day. So mathematically speaking, the bigger this number gets, even if it's a 5%, if it stays 5% every single time, the bigger your number is, 5% obviously is bigger of a bigger number. So 5% here looks way worse than if the 5% correction happened here. The 5% correction happened here, you know, it might have been only like 700 points, but it's still 5%. So like whatever the percentage was, I don't know the exact number. Well, yeah, it says right here, 4.6%. So 4.6% of a smaller number is a lot smaller than 4.6% of a bigger number. So as the Dow gets bigger, those correction days are going to get bigger. So you got to think of it in terms of percentage-wise. If this had dropped like 10%, I mean, you're talking 2,400 points in one day. That would be way more alarming to me than this, and especially a day after a Friday if that were to happen. So I just think it's just a normal correction. Let's see. Fake out means you think it's going to go up, but it's a bull trap and you get ripped. Oh, crap. Well, I got ripped probably a little bit, but I still got in cheaper. So, I mean, I'm still chalking that up as a win considering, I don't know if I would have done that in the beginning of my trading experience. I might have just sold and waited too long to buy. I might have bought on the way back up and I might have got in. I don't know. I'm hoping that my experience is going to save me a little bit of money this time. Aren't you in RH Discord? Are you talking to me? I don't think, I'm not in that. Okay, yeah. So they're talking about something else. So anyways, I don't think it's a bear market. I think it's just a correction. I think once, let me go back to the chart here. I think once this number, you know, maybe comes down a little bit more, it's going to come back up. So, I mean, like, it's gone up, and up. It came back down. I think it might, you know, if it comes down to here to 23,000, fine. As long as it comes back up again, as long as it goes back up to 26 eventually, hopefully before the year ends, actually, that would be the ideal scenario. But I think it will, so I'm not going to panic just quite yet. Whoops. I'm just going to close that. So, yeah, I think that's everything I wanted to talk about. Let's see. Yeah, let's pray. I am. Totally am. Oh, Vanessa, what's going on? You just got here 5 minutes ago. We're down 10K today. Yeah. How long, based on your charts, do you think this is a correction will last? Sorry, I'm new to charts. I'm kind of new to charts as well, so don't feel too bad. Um, Most people have said that it's just going to be February is going to be a rocky month. So, yeah. Yeah, and options are so expensive now because of volatility, which is why I do want to I should be adopting strategies where I'm selling options more. Because someone mentioned on the channel before that what he does is he sells put options, because if you're trying to get into a stock and you're waiting for it to come down, well, if you sell a put, you're making money while you're waiting for it to come down. Because if it comes down and they exercise the option to sell those shares to you anyways, you're buying 100 shares at a lower price anyways, which you planned on doing anyways. So by selling a put option, you make a little bit of extra cash while you're waiting for that stock to come down. And in hindsight, that's what I should have done with OLED, Universal Display. But I wanted to sell covered calls, so I just bought the 100 shares outright to do that. So I don't know. At least I'm lowering my risk. I count that as a win compared to how I've been trading. So yeah, Bitcoin is less than 7K now. Yeah, that sucks. Dude, I don't know what's going on. Because a bear market would also completely wreck crypto too. Yeah, I think it would wreck everything. Do you think you should trade stocks for a while before getting into options, or just jump straight in? Oh yes, definitely get into stocks for a while before getting into options. Please do not jump into options. Someone messaged me that they did that and they lost over half of their portfolio in like a couple days. So please don't do that. They had a lot of early expirations, a lot of February expirations, which I would never do that. If it's February, I'm not buying February options. I'm buying January of next year at the minimum. So you got to give yourself time. It's safer that way. But also don't go all into options. Just do, if you want to test the waters, you can do that. But yeah. So in my opinion, tomorrow is by far the most important day of these red days. Okay, it's testing a major trend line since last August, all of the indices. Okay. Okay, oh man, so I hope tomorrow's good. I really do. I'll put it this way, I made over 2x my portfolio in cryptos and futures. I'm extremely nervous going into options. Yeah. Well, I think futures are even more risky than options, I thought. From what I don't know. I could be wrong. Did I sell anything today? No, the only thing I sold today was my 2 Apple put options, because I wanted to cover myself, because once I triggered another buy, my cash balance was negative, and I don't want to keep it negative. I want to keep it positive, so I'm not paying interest. So I just sold my 2 Apple puts today. Oh man, I haven't even looked into cryptos. Oh my gosh, do I even want to look? Oh my gosh, Coinbase, not Coinbase, CoinMarketCap. Okay, let's see. Ooh, Ethereum's at 689. Ooh, Ripple's getting really crushed. Cardano, oh my gosh, this is, yeah. I'm in Cardano. I'm in Neo. Ooh, oh man, that is bad. I'm in Monero. Oh my gosh, Monero was like almost half of what it was when I bought it. Yeah, I don't want to look at this. I had a bad enough day. I don't think it can get any worse. Now that I just checked this, it can. But ooh, OMG's at 927. OMG. Oh my gosh. Yeah, they were in the 20s. Oh my gosh. I think I bought it like at $22. Dude, F my life. I'm done. Thank you for telling me. Thanks for making my day way worse. Ugh. Oh my gosh. I watched an Adam Koo chart video explaining how to technically analyze the past drop, and it makes a lot of sense. Oh, okay, I'm going to write that down because I want to check that out as well. Was it a recent upload? Jaime Lopez, was that a recent upload that Adam uploaded? Because I'll check that out. Futures are great due to volume, especially the SPY. Oh, okay. So there's always lots of volume, lots of open interest. Is that what you mean? Yeah. Yeah, I wish I did have the time. I mean, on days like this, I do want to do live streams to kind of give you guys updates and stuff, but I do need to edit a lot of videos. They take a lot of time to edit. Plus, I still tutor a lot, and you know, life stuff gets in the way. But yeah, I will, if the market ever has, you know, bad days like this, I will do some more live streams. If it has a really, really good day, might do a live stream. Eventually, I'm going to be doing live streams every Friday. So once I get caught up, my Friday vlog will be a live stream. It won't be a vlog. Unless people don't like that. And it gets kind of annoying. I don't want to annoy everybody. But I do like, if that's like the most live I can get. So I know some people want to see my stuff like in real time. So futures are more risky if you are bad at trading, I guess, is the worst way to put it. Options is a completely other thing you have to learn. Okay, with futures, it's kind of just buy and sell, same as stocks. Okay. So there's no like credit spread strategies or like straddles, strangles with futures. It's just you're just buying and selling. Is that what you're saying? I think crypto will continue to decrease until it reaches a more real world value. Yeah. I mean, it's one of those things where it's like, it's so ahead of its time still. A lot of people just still don't understand how it works. And so most of the people who trade cryptos are younger people, inexperienced people. So they're more likely to panic sell. So it makes it a much more volatile thing to trade. That would be so good. I will be here for the Friday live stream. Awesome. Yeah. As soon as I catch up, I'm caught up to, I was over 3 months behind. Now I'm 2 months behind. Once I get to 1 month behind, I think even that information will be pretty relevant. But then once I catch up, every Friday will be a live stream until people are like, okay, stop doing that. But that'll actually help me because it'll be less editing for me as well. It'll just kind of free up some time and I'll stay on track a lot better. So, okay, it was his most recent upload, and then he did another about the crypto fall. Okay, cool. Thank you. I'm gonna look at that. I think it's about to drop again. What? You better not be spreading FUD, jocks on horses. What are you talking about? Where is their after hours? Oh my gosh! Please don't tell me. We're gonna check the DOW. Let's see. Do they have an after hours for the DOW? Is it this one? Oh no, I don't know if that's that one. Well, I mean, it's down after hours, so that's probably pretty close. It doesn't seem to have an after hours thing here. So can you explain what you were talking about? Oh, check CNBC. Yeah, I did look at that. Let's see. CNBC.com. Trump's, let's see. Fidelity says it saw no panic among its customers and more buying than selling during the plunge. That's good news, guys. I like that. Obscure security linked to stock volatility plummets 80% after hours. Obscure security linked to stock. Oh, this must be it. This must be the one that Brian was talking about. We'll open that one up. The sell-off continues into Asia after Wall Street. Yeah, it's just more panicking. Wall Street's biggest bull isn't phased by the massive selling. That's good. We're going to read that one. Stocks futures tried to stage a comeback, but market looks to open lower Tuesday. So it's trying. Some people had trouble checking their investment accounts. That sucks. Okay, so what did I just open here? So here we go. An exchange-traded security, which is supposed to bet on a calm markets, was collapsing after hours. The Velocity Daily Shares VIX short-term exchange-traded note is down more than 80% in extended trading on Monday, which is today. The security issued by Credit, however you pronounce that word, is supposed to give the opposite return of the VIX. Okay, the market's widely followed turbulence gauge. The VIX doubled during regular market hours on Monday, causing obvious havoc for a product seeking to track its inverse return. Okay, yeah, honestly, there's just so many ways to bet in the market. When you have that many ways to gamble, you're going to run into situations like this. Everyone's trying to make money. You know, it's greed. A little bit's greed. I mean, you know, it is what it is. People like money, and that's not going to change. Wall Street's biggest bull isn't phased by selling. Let's hit pause here. Today's pullback is an opportunity to buy, says Wall Street bull and UBS strategist Keith Parker. I still see values opening up, he says. He anticipates as much as a 5% pullback before the market starts to shake out. I mean, it did pull back 5%. But yeah, he's another one that says it's going to be fine. The data is still positive. We still have a positive backdrop for the tax benefit, better growth. Non-manufacturing ISM printed 59, whatever that means. So we're not in that negative data backdrop. He said strong sectors to watch are discretionary, industrials, and technology. Yeah. yeah, I also still have to film for today's vlog, by the way, so I'm gonna wrap this up a little bit. I think those were the only 2 articles I looked at. So, oh, this one. So Fidelity says it saw no panic among its customers and actually more buying than selling, and that's good. I actually did more buying than selling as well today, so I fall in that category. Hopefully, a lot of other people do. From a retail perspective, definitely more buyers than sellers today, he said. We are not really seeing panic. Can't say the same about the crypto market, though. Crypto is probably people like setting their houses on fire. Fidelity did not have exact data to share as of Monday evening, but he said anecdotally that levels were similar to Friday, which saw 52% more buys than sells. That's good. Company's website appeared to have not have issues, in contrast to reported outages at T. Rowe Price and robo-advising firms Wealthfront and Betterment. Never heard of those. So yeah, I think, what are you talking about, Jocks and Horses? Can you be more, what is dropping 10 points? Can you please elaborate? You're freaking me out here. You're really freaking me out. I think I have it open on Thinkorswim. I need to get into Thinkorswim too. Trump takes credit for the stock market highs, but he won't take credit for this fall. Yeah, I probably would agree with that. I mean, he was just talking about the stock market in his State of the Union address. So yeah, let's okay, you're talking about S&P futures. So 10 points, just 10 points, like 10, not 10 percentage points, right? Or are you talking about 10 percentage points? We should all start rumors that the S&P is up like 800% after hours. Maybe everyone will buy stocks. Just like make videos. The Dow is up 300% after hours. Everyone buy. Bring the prices back up. Okay, so 20 points is, I think you're being sarcastic. Yeah, still mining. People are still mining Bitcoin. I think that's what you're talking about. I have this button here that came with my new keyboard, and I'm like, I've been stressfully pressing it because it helps me helps me be more calm. I got a Black Widow Razer keyboard because my keyboard broke, and it's really cool. It has like it lights up when you hold it. It's got like the, you know, I've just been pressing it nervously for the past couple days. Like, come on, market, come back, buy. So anyways, I got nothing else to say, guys. I'm still holding. I am up for the year. So hopefully, because January was like my best month ever, and you guys will see that in due time. You're going to see it very soon. I had a redonkulous January, but it's going to be matched by a redonkulous February. So that's kind of the swings of the market. But I'm not freaking out. I'm not like exiting. Yeah, I'm down. Let's make vids that everyone is up. Yeah, on the biggest market bounce ever. Yeah, I agree. I'm with you. Let's do it. So, can I post links? I don't think you can post links, but you can post without the .com maybe, and just people can just copy paste it. I mean, you can copy paste stuff in the chat, right? Yeah. So. Yeah, just copy paste the URL without the .com, and people can just copy paste. So, anyways, we're coming up on almost an hour. So, if you guys want to continue the discussion, I did create a Facebook group called Road to the 2 Comma Club. I've been I don't think I made an official announcement on it. Maybe I did. I might have mentioned it in a live stream. I should have posted it on the description of my videos. I'm going to start doing that from now on. Sorry about that. But yes, if you search Road to the 2 Comma Club on Facebook, you will see a group with like 13 members in it, because there's just not that many of us right now. But if you want to continue talking about what you're talking, you can post the links to stuff you guys are talking about. Gayazo Jocks. I'm going to write that down. I'm going to search that. I'm still learning. I'm trying to learn a lot. I've learned a lot the last week about options and about strategies. And so I think the fact that I bought puts on Friday, I feel like that makes me a better trader, because it has you know, saved my butt a little bit from losing even more money. So anyways, maybe you just Google it. Google the Gayazo. Yeah, Amazon is $15 down after hours. but that's normal for Amazon. They're such a expensive stock. $15 is a pretty normal move for them. Anyways, I have to get going. I got to record the vlog. I have to wait for I think my girlfriend's coming in at midnight, so I'm gonna be editing probably until then go pick her up. I haven't eaten dinner yet, so I gotta make some dinner. We should do like a live stream where I show you guys how to cook some good food, because man, I've been learning some stuff with that too. But that has nothing to do with finances. But anyways, thank you guys for coming. I hope you guys didn't lose your shirt today. Remember, don't invest more money that you can afford to lose. Just invest your throw around money. If whatever you have, don't bet don't bet the farm. Don't sell your house. Don't sell your cars. Just everyone relax. We're gonna be fine. We're gonna in this together, guys. We're gonna do this. It's gonna be funny because we'll do a stream at the end of this year, and we'll watch this stream. So remind me if I forget. We're gonna watch this stream later in the year, and we're gonna laugh. We're gonna have a good laugh about this. I hopefully, knock on wood, cross fingers. But I think we're gonna look back at this and be like, yep, that was normal, and that's what should have happened. So, anyways, thank you guys so much for watching. Hope you guys have a great evening, and we will see you guys tomorrow. Or, we'll see you guys at the next live stream whenever I do it. Okay, I love you guys. Peace.